Well, today we see the SPY and the QQQ showing signs of weakness, and honestly, it is about time. Given last week's reaction, it's totally understandable to see bearish reactions in the indices and in many of the stocks that are on our radar right now. The big question is, could this be a top signal? Could the trend reverse from here? Well, in this video, we'll talk about some scenarios and study the most important turning points for our stocks. Welcome to the Finance Hydra channel. My name is Nathan, I'm a professional trader, and all the ideas described in this video, all the scenarios evaluated, are based on technical evidence. No opinions or assumptions, just facts and charts. Now, let's see what's going on here on SPY, because we are stabilizing today. We are roughly on break even. We are stabilizing below a critical resistance area. This dual resistance level made by the 564, 565 is near the all-time high. And seeing the SPY showing weakness below this key point is particularly problematic. However, is this enough to trigger a top signal? Not yet. This is not a top signal yet. Yes, we failed in breaking Friday's high, in continuing this bullish sentiment. However, we also failed in breaking Friday's low. We are still above Friday's low over here. Therefore, we are not seeing any bearish candlestick. We are not seeing any bearish chart structure over here yet, suggesting a top signal. If we see a top signal, we are gonna see possibly a pullback ahead. Now, pullbacks are not reversals. As far as I know, any pullback to the 21-day EMA over here, the exponential moving average, would be totally normal, okay, and expected. What could be a very dangerous bearish chart structure on SPY? If we lose this previous support level, which is quite far away from the current price right now, $539. Why is this key point so important? Because by losing it, SPY may give us the impression that it wants to trigger a possible double top chart pattern, one of the most dangerous bearish reversal chart structures ever. Therefore, this key point is gonna be very important. Meanwhile, the most important support level is the 21-day EMA on the daily chart. What's more, by losing 539, SPY would also automatically lose the 21-week EMA over here, and we're gonna see a possible major double top chart pattern on the weekly chart as well. Therefore, we are gonna see multiple bearish chart structures in this scenario. However, so far, so good. So far, there is not a single top signal. So far, SPY, although it is stabilizing, it is roughly on break even right now, we are still maintaining the short/medium term bullish trend. Bull trend, all right. Similarly, we see the QQQ also trying very hard to maintain the bullish bias. It is still above the 21-day EMA. However, in this case over here, we technically lost Friday's low. However, we're not gonna close. We're not closing below this key point yet. Therefore, we don't see any crystal clear top signal materialized on QQQ yet. Even if we see one, we have the 21-day EMA. We could work with some Fibonacci's retracements over here to define the next potential support levels for the QQQ. But so far, this is not enough for us to believe the QQQ is gonna trigger a top signal. It is gonna trigger a pullback next. It is not enough. We're gonna materialize a better, stronger, bearish reaction in order to do so. So far, apparently the situation is under control in the indices. Now, Nvidia, on the other hand, it is losing Friday's low. Friday, we failed in breaking Thursday high over here. Therefore, we are showing weakness over here on Nvidia. However, when we take a look at the 1-hour chart, we are just stabilizing around the 21-hour EMA. Therefore, short-term speaking, we are not that bearish yet. We are still maintaining the bullish bias. We did trigger this inverted head and shoulders chart pattern over here, and so far, so good. so far the short-term trend is still bullish. However, I do agree, we are on the verge of reversing this bullish sentiment. What it takes for us to reverse it? Well, we gotta lose the 21-hour EMA over here along with the 21-day EMA. They are almost essentially around the same price. And when we see the 21-hour EMA near the same price level the 21-day EMA is, well, this suggests a lot of stabilization, all right? Clearly, Nvidia is uncertain, right? Nvidia's price is totally uncertain right now. We are just moving erratically over here, moving sideways. We are around the same price level we were in June this year. Therefore, we are totally stabilizing. This seems to be a sideways correction, a congestion, or a consolidation, all right? So we are not making any meaningful bearish chart structure, but we're not making any bullish chart structure either. We are still above our support levels. However, Nvidia has yet to trigger a crystal clear bullish pivot point, a higher high, higher low. Therefore, in order to continue the bullish sentiment, Nvidia has to, as soon as possible, to break the $120. Only then Nvidia will potentially retest our next resistance levels near the $130 up here, which is our next technical resistance level. Therefore, we gotta watch out for these two key points, right? These two major resistance and support levels, the 21 EMAs and the $120, the previous top level, are next, possibly next pivot point, bullish pivot point. All right, now regarding Tesla, we are still trading inside this ascending triangle. This is very, very interesting because this pattern over here is quite meaningful. Only by losing this support level, the baseline of this triangle, this purple trend line over here, which is very close to the 21-day EMA, only by losing this dual support level, Tesla will technically show real bearishness over here. As long as we stay above this dual support level, that's fantastic. The bullish bias will probably persist. On the other hand, we gotta break the $233 as soon as possible in order to materialize this bullish continuation chart pattern, all right? Because this is our most important resistance level on the daily chart, $233. Only by breaking it, we're gonna see Tesla retesting higher levels, the 245, closing this gap, or preferably the previous resistance level seen on the weekly chart, 265. Therefore, Tesla has a lot of upside potential. However, we gotta trigger this ascending triangle as soon as possible. And of course, we gotta avoid losing this support line, this trend line over here. Now, you may ask, Nathan, there is an ascending triangle. Okay, but what do I do? How do I make money from it or use it to my advantage? Well, my dear friend, I teach you all of this and much more in our free ebook on technical analysis written by me. I teach you the basics of everything you need to understand the market and start trading strategically without feeling stress or anxiety, using only technique. Just take a look at our ebook over here. I describe statistics, I describe chart patterns, I describe candlestick patterns. Here, for instance, on a triangle chart pattern, if you want additional information, you could buy at a pullback, as all types of triangles have roughly 65% of pullback rate. What this means, all right? What this means over here? Well, it means that even if we see a pullback over here, Tesla has 65% chances of making a pullback to the $233 again, and then bounce to higher levels, all right? I teach you guys statistics, chart patterns, technical analysis, risk management, and much more. Just download our free ebook, link in the video's description, all right? Now, AMD is looking very good. It is still very bullish. We broke Friday's high over here. Now, yes, we are leaving a relatively big shadow above the candle's body today. However, On the 1-hour chart, we have yet to retest the 21-hour EMA. We are still exploding. We are not making any decent pullback over here. We are still very bullish. And if you ask me, any pullback to the 21-day EMA would be totally normal, expected, desirable, and possibly another buying opportunity, because you're gonna buy the dip near a support level when the risk-reward ratio is very good. Therefore, AMD is a very promising one. However, we gotta wait for a better reaction over here, all right, near a support level before saying this one is a buy again. Now, you guys have been asking me about NIO, because NIO looks very interesting. It is just exploding, all right. After reporting earnings over here, it is exploding sharply. If you ask me, its next technical resistance level is the $6.05. That's where we are heading to next. We broke this descending triangle trend line, this descending trend line over here, which was later a possible descending triangle chart pattern made by this trend line and made by this support level around $3.61. We did an upwards breakout. We are flying above this resistance level. We are flying above the 21-day EMA. Therefore, $6 is our next technical target. However, I find it very hard to believe NIO will retest this resistance level without a pullback next, all right? Therefore, yes, NIO is still very bullish. However, it requires a pullback in order to be a good buy again. By the way, on the 5% project, we did buy NIO here around this bottom level, and we did nail a very good movement. However, right now, it is not a buy. The next time it triggers a buy signal, well, I'm gonna give you guys everything you need on our Telegram channel. Therefore, remember, take a look at our website, link in the video's description. And if you're still watching this video, well, consider subscribing this channel, because I'm here every single day talking about stocks, technical analysis. We study the market together. Every single idea, every single insight is technically based, free of bias, free of opinions, only strategy. Therefore, subscribe to this channel, click the like button to support me as well. I highly appreciate your audience, my dear friends. Thank you very much. See you guys tomorrow. Stay safe. Bye bye.